Sanjay, stay with us. We'll focus on one particular name which is seeing a massive sell-off, Paytm. And I want your thoughts as well, Sanjay. But let's actually bring in an analyst who tracks the particular, the company who's got coverage. Stock's down about 18% or so. We've been, of course, telling you what the news is. But let's get a view now. Rahul Jain, VP Research at Dolat Capital is with us. Rahul, good to have you with us here. Thank you very much. What do you make of what Paytm is saying in terms of kind of trying to now go into high-ticket value loans away from the smaller loans? Of course, I mean, this has been prompted by what the RBI has done. Market, of course, doesn't like it. It was a very fast area of growth. Your thoughts?
Yeah, first of all, congratulations on achieving the milestone. To your question, I think what has happened and the outlook curtailed, which they have done on the one of their loan segment, which is postpaid, is more to do with what the industry thought process is right now for sub 50,000 kind of a loan, which close to around 38% of all loans distributed by Paytm. And of course, there is no much choice out there, and that's what they are trying to align with what the market forces are thinking at this point. While the performance, which they keep sharing every quarter of these loans, have been quite consistent and well under any kind of a risk of deterioration. So it's more coming from a supply perspective where they don't want, the lending partner don't want possibly exposure to this segment, which Paytm also wants to align with. Now, moving to higher ticket item, higher ticket loans in the personal loan and merchant loan can kind of mitigate, and they have said that they've already started doing triple digit kind of a run rate on this higher ticket loan item. But there is a big gap which we need to refill, because the postpaid base would be around 5 to 6,000 crore impact that would happen over 1 or 2 quarters, and that's need to be filled with this higher ticket loan and general growth in the loan. So to that extent, it would take some time, and that's why it calls for 2 to 4% kind of a revenue impact on an overall basis, and 5% kind of a QOQ decline that we anticipate in the financial services segment for them in Q3.
So the lending, the value of the lending portfolio sub 50,000 category is 5 to 6,000 crore for Paytm as of now?
Yes, on the exit quarter run rate of Q2, that number is close to that.
So if the top line is going to correct by 2 to 4%, we're seeing a very sharp decline in the stock price. The stock has fallen 17, 18%. So can you explain that for us?
So 2% of course is for this particular year, because we are taking only part of the impact in this year, and it will be gradual. If we more see from an FY25 perspective, the top line impact would be close to 4%. And these are generally much higher EBITDA margin business compared to what is the rest of the businesses. So the EBITDA impact would be close to 7%. That's what our numbers suggest. And that's why the reaction is higher. Of course, we think this is an overreaction, and as soon as we see any further update on the quarterly matrix that they used to share in the past in terms of what kind of run rate they have achieved, or maybe in the quarterly results when we see those results and the outlook they share at that point of time. And if there is much better outlook out there, which we think should be the case, I think some of the risk and overreaction would be receded. And that's why we think this is a significant opportunity to participate for people who are on the side, or probably someone who are looking for a good exposure in a fintech market.
Okay, all right. Rahul, it's good chatting with you. Looking forward to keeping in touch and getting you more